Hello everyone, my name is Matt Cincerello. I'm the owner and managing partner here at U-Nique. You can learn more about what we do by visiting our website, u-nique.com. While there, I recommend you check out our free stuff page where you can read our blog and also download free content like the top 10 cash flow mistakes that can cripple a business. Also, if you're wondering what I'm drinking today, it's Friday, so today's choice of beverage is a South African cab. I've had a rough week, and so I'm going to enjoy myself a little bit. If you notice my cup, it is bearing the hashtag Make Today Count. This is the slogan for my Best Friends Foundation, which is a close and not-for-profit that I'm a board member of. A link will be provided for a form that you can fill out if you or someone you know needs help dealing with the impact of cancer in their life. So let's go ahead and jump into today's topic. And today's topic is 4 tax-saving hacks for breweries. Don't you just love hacks? And the 4 hacks I'm going to go over are the Work Opportunity Tax Credit, Depreciation, 401k profit sharing, and the R&D Tax Credit. A lot of people aren't familiar with the Work Opportunity Tax Credit, and what it is a way just to receive a few extra $1,000s back from the IRS for every person you employ from a certain targeted group. And while there are a lot of groups, typically we see the employment of certain veterans and disabled persons. And this is a great way where you can help those in need, support your local community, and improve customer and community relations. Also get a little money back from the government in doing so. And the next hack is depreciation. So while depreciation isn't anything new, what I actually suggest is slowing down the write-off of these 100% first-year write-off taxable assets. And the reason is that while some owners open up their brewery as maybe a second or third business, for many brewers, this is their first business, and they quit their jobs to start this dream. And most owners don't tax plan, and they don't plan their cash flows appropriately, and then they have to rely on the immediate 100% write-off as a relief mechanism for their cash flow. However, writing off expensive equipment during your initial years is probably not the best decision. You want to slow it as tax write-off so that you get the deduction in years later when your tax bracket actually generates tax as in a higher tax bracket, which in turn will generate a larger ROI tax return for you. Now, the opposite to that is the hack of speeding up depreciation. And I'm not talking about the advanced depreciation for first-year assets. What I'm talking about is cost segregation studies. And so a lot of brewers end up buying their own building, and commercial buildings have one of the longest depreciable lives, 39 years. It's a really, really long time to wait to recoup a tax benefit on a big investment. And what a cost segregation study does is it helps to parcel out these short-term assets that are in a building from the 39-year life into buckets that are either 5, 7, or 10 years in life, speeding up the tax write-off and putting more cash in your pocket. Another tax hack is the 401k profit sharing. Again, this isn't something new, but I would still say that maybe 5% of the time I come across business owners who are actually aware that you can max out your 401k at over $60,000 a year. Yes, you heard that amount correctly. And the best hack with this is that you don't have to pay it in the year you're deducting it. So for instance, for 2022, you can accrue this profit sharing contribution, but you don't have to pay it until you file your taxes on October 15th of 2023. And this hack allows you to wait for the 2023 year to expand and see what's going on in the economy. Has your business improved? Has it gotten worse? So that way you can decide and keep the contribution, make the payment, or cut it off and continue 2023 without it. And the next and last hack is the R&D tax credit. Again, this isn't a newbie, but it's just really overlooked in the brewery industry. You get both a federal and a state tax credit. And even though the IRS recently changed the rules on not expensing and having to amortize these R&D costs over 5 years, taking the credit is still more likely the right course of action and will generate more money in your pocket. There's also the state tax credit. And right now, there are only 14 states that do not offer an additional credit on top of the IRS. So what qualifies? This may surprise you, but these are the kind of activities that qualify. And after hearing these, you may say, Matt,
that sounds like my entire business.
And yeah, it probably is. So here's some examples. Create a new recipe. You're like,
hey, I've never made a milk stout.
Guess what? Cost of making that will qualify for R&D. Creating and evaluating new small batch recipes. Let's say you want to test out in little barrel systems recipes before you go into mass production. How about the processes into a larger mass production recipe? Again, everything changes, the chemistry changes. That's R&D. There's also new processes and techniques with the business. Designing, building, or implementing custom equipment. Look in your facility right now. I bet you designed something specifically to work within the layouts of your commercial property. There's also creating and implementing new techniques in the brewing process that you put in place to either enhance the quality or the consistency of the flavor profile, or maybe just to improve the actual throughput of the entire brewery process. Then there's also designing, building, implementing automation in the brewing process so that you can enhance the quality and consistency of the flavor profile, or again, improving the throughput of the entire process. And there's a lot more other examples, but I think you can see from the list I just gave you that there's a lot of tax saving opportunities in your business related to R&D. So I want to thank you for listening to our top 4 tax saving hacks for breweries. If you appreciate our advice, please remember to like our video and subscribe to our channel for future content. Until then, remember, don't conform, stay unique.